I'm Charlotte McLeod with the Investing News Network, and here with me today is Tom Brady, Chief Economist at Newmont Mining. Thanks so much for joining me today.
Thanks, Charlotte. Good to be here.
Of course. We're here at Mines and Money in New York. Your talk this morning focused on understanding macroeconomic trends impacting the mining space. Can you briefly outline the main trends you see affecting the space right now?
Yeah, overall, there has been strong economic growth in the U.S. and throughout the developed world, as well as emerging markets. So that's been very positive for a lot of the infrastructure metals. Copper, in particular, iron ore has seen significant demand, particularly into China. So that's been positive. Lots of uncertainty still in the world, geopolitically. So you're still seeing a lot of significant safe haven investing into precious metals like gold. So overall, been continuing a trend over the last couple of years.
Many investors come to events like this in search of stock picks and advice on investing. To what extent should investors be weighing macroeconomic events when they choose stocks?
Honestly, again, being the economist, I just think it's important to have that big picture to try to understand not only economic trends, but what are the longer-term demographic trends when you are investing in a sector, and then from there you can kind of help shape individual stocks that might be able to take more advantage of that. So it's a blend.
Any advice on where to start with that as an investor?
Honestly, I always tell people there's just no shortcut to the job. You just have to have your nose in a book or an article all the time. It's just a lot of just research and start. I read myself. I read the Economist as well as the Wall Street Journal a lot, Financial Times as a good starting point, and then more of the specific mining-related journals.
Yeah, spending the time and doing the research. In recent years, some experts have expressed concerns that we've reached peak gold production, largely due to cuts in exploration spending. This is a topic you just touched on in your talk. Can you share your thoughts?
Yeah, I just, what I did talk about was kind of a history of the gold mining supply since 1900, periods that we've seen supply decline. One period notably was in the early 2000s, and that resulted from a lower gold price environment through the later 1990s, where you did see mining companies start to cut growth spending, exploration, and advancing projects. Similar trends have happened in this sector since 2012, and I see that starting to impact marginal declines on an annual basis going forward for the next few years at least.
Can you share kind of what the numbers look like for that?
Well, in that 2000 period, it was about a 1% per year type of decline. I would see something similar going forward.
For Newmont, as a major gold producer, what are your goals for production? How has the company balanced keeping costs low and also investing for the future?
Newmont, in terms of the guidance, in that around 5.1, 5.2 million ounce range, for the near term, as an annual guidance that we've given. The company was quick to get out of the gate in terms of selling non-core assets, paying down debt, in that 2012 on period. At the same time, we were able to use that to advance projects. We built Marion the Marion mine down in Suriname. We built Long Canyon in Nevada. So continuing to advance, and ideally, that's when you want to be investing in new projects. Is when the demand for engineering services and capital and capital equipment is relatively low. So I think Newmont has done a nice, at the same time being able to take advantage with a decent balance sheet, for M&A opportunities when they do occur. So that's with the Cripple Creek and Victor mine, Newmont was able to capitalize on that as well.
Taking a look at the gold price, what are your thoughts on gold's performance this year? Has it been in line with what you expected, or were there surprises for you?
It has been pretty much in line with what I expected. It has been since 2016 a very much an investor-driven market. Physical gold demand from jewelry, bars, and coins, very muted in terms of really in China and India. Strong investor activity, lots of safe haven investing going on. Economic uncertainty also driving a lot of investors to continue to be in gold. So.
What can we expect for the rest of the year? I think we're about flat year to date right now. Can we see prices going up?
I think we're in a, we'll see some price fluctuations in that 1275 to 1350 range in my view. Again, driven by the same themes that have been driving gold price so far this year.
Any insight on what we would need to see to have gold go higher?
Again, it's going to be some radical news that comes out that really drives a lot more investor interest into gold. So it.
Okay, makes sense to me. Thanks so much for joining me today. That was great.
Okay.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Tom Brady of Newmont Mining.